Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, July 6th, 4:53 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market. We continue to be in a correction. You can see over here by the trend gauge, market leaders pointing lower, but some signs of life. The sub arrow is green and pointing toward neutral, and some signs of life with the short-term 21-day exponential moving average as the QQQ NASDAQ 100 was able to get above the 21-day moving average on a closing basis today. Intraday, the S&P 500 poked its head above, but gave it up at the close and closed beneath it. But hey, it's better than a sharp stick in the eye. 50-day moving average, we're still bearish as we're trending below the downtrending 50-day moving average across all 5 indexes. Same thing with the long-term 200-day moving average, well below that. So what happened today, as I mentioned, NASDAQ 100 regaining the 21-day moving average. S&P 500 hit resistance and reversed, so kind of a mixed bag on the day from that perspective. We had the Fed minutes at 2 p.m. that introduced some volatility as a spike up, a spike down, another spike up, and then a pullback at the close. We'll take a look at an intraday chart momentarily, but the tail of the tape as far as the 8 indexes that we track on a daily basis. G6, that's our growth tracker, composite of 6 growth ETFs, down 0.7% on the day, giving some back after having a nice day yesterday. S&P 500 up 0.36%, was up over 1%, I believe, at one time. NASDAQ 100 up 0.64, Dow up 0.2, mid caps down 0.6, Russell down 0.8. Diversified Global 60/40 stock and bond index down 0.7%. Grotection in-house down 0.16%. We'll get to the tail of the tape and some charts of interest momentarily. But first, let's get to the team here at Revere. Trend following is what we do. Pie chart people derisively call it market timing, thinking that, oh, you might get lucky getting out, but you don't know when to get back in, or vice versa. Well, we've got some time-tested rules that tell us when to get out, how much to be allocated depending on various strength measures of the market, and when to lighten the load, when to get out completely. And if you're interested in this approach, we'd be glad to share it with you. Email any of us, Dan, Tim, Hunter, Muriel, or Don at revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Big welcome to the new people joining us, joining our asset management services. Got recently introduced to a much wider audience as a result of an interview that I did with Richard Moglen, and a lot of people contacted us after that. Gotten a lot of good feedback, and glad to welcome you aboard. So let's get into it. Here's the S&P 500. So what do we see from here? Well, harsh move down 3 weeks ago, natural bounce up off of that move. Got us back above the 21-day moving average, flattened it out for a couple of days, tried to get higher, and then a big, ugly reversal failure on 628. Took us down. Now, 2 of the last 3 days, actually the last 3 sessions, we'll say, to close June and then opening July and then opening this week, we had sell-offs, but we did not go below Friday's lows and also the low of 623 as we were trying to come up off the bottom. We broke out of that range today. The high of that range had been about 3830-ish. And you can see here, got right up into the declining 21-day moving average before we failed. Let's take a look at this on a 5-minute chart. You can see the volatility very clearly. Actually, let's go to a 10-minute chart here. You can still see the volatility. So here's the gap down to open the week on inflation fears over in Europe, but very strong close. Followed that up. We tried to get above 3850 today, pulled back to this 3809 level. A lot of support at this 3800 to 3809 level. There's a key fib in there. You'll see when we bring up the tail of the tape in a minute. And then we trudged higher until the 2 o'clock Fed minutes came out, and then we introduced volatility. The Fed algos always make a low, I'm not kidding, they always make a lower low and a higher high than the previous bar leading up into them. And then you got to wait 15 minutes or so and see which way we resolve. We resolve to the upside. This coincided with getting us back above the 21E on the QQQ, which I'll look at in a while. At the high of the day here, 3871, we were above the 21-day moving average on the NASDAQ 100, but you can see how we gave it back into the close. So we'll see what tomorrow brings on the S&P 500. Let's go to the NASDAQ 100, and we'll go with the daily chart here, and you can see closed yesterday right below the 21, closed just above the 21 today, a little bit off of the highs. We were up over 1% at one point, but above the ADMA, above the 21, we got the downtrending 50-day moving average overhead, so we'll see what happens when we challenge there. We haven't been above that since all the way back at the beginning of April, so that certainly would represent some resistance when we reach there. Let's see how far we are below that on the S&P 500. I know it's below 4,000 now, and 3.5% below that on the S&P 500. So some room to run if we can clear today's highs before we come into that. We've also got an unfilled gap here at the 4017 level from June 9th. Gaps tend to be filled. Don't ask me why. It's just kind of a technical analysis phenomenon, I guess, because nature abhors a vacuum. So wouldn't be surprised to see us poke above the 50-day, fail, come back below before we regain ourselves, and then see if we can work our way higher. July typically is one of the stronger months from a seasonality perspective. So that's not something that we absolutely trade off of, but we certainly keep it in the back of our minds when we're looking at higher term time frame, longer term time frame. So here's the Dow Jones Industrial Average. You can also see rejected at the declining 21-day today at 31,224. It'll take another shot tomorrow, or maybe it won't. The good thing about today is, particularly with the NASDAQ 100, we fail the 21, we'll be out with a little bit of leeway below today's low, because that'll also get us back below the 8 EMA. So something to consider. And then, the risk rewards in our favor. Yes, we're below these moving averages, but taking a shot at a good risk reward area where we get stopped out or let it run. That's how you can't stay out forever and just assume that the market's never going to recover. It's going to take multiple shots. Those shots sometimes work, sometimes they fail. Sometimes you get a double-digit move before they roll over, and we can certainly get that with the NASDAQ 100 being 17% below the 200-day moving average. See, this is why I say how important that 200-day moving average is. Once you get below that, you're at risk of a big fall. We sent out our client video detailing how we've basically stayed out of the way for most of this carnage once we broke this level here, got back below the 50-day and the 200-day, but we're still 12% below that, below the 200-day moving average, and it's declining on the S&P 500. Let's take a look at the mid and small caps now. Here's mid caps lagging a little bit, but let me point out, I know it's true for not true for mid-cap growth. So they basically look about the same relative to their moving averages. This is the growth portion of mid-caps. This is the value portion of mid-caps. Both look about the same, but let's take a look at IWO. This is the growth portion of the Russell 2000 small cap. It's been outperforming the value portion as oil stocks have really come off lately. That's the primary driver of that, and tech has been a little bit stronger. So IWO sitting just below its 21-day moving average. Here's IWN. This is the value half of the Russell 2000. You can see the relative strength lagging over the past 3 weeks for that, and it didn't come up and touch the 21 yet. So overall, rejection at the 21 today, because it wasn't the growth stock's fault. That half outperformed today, down 0.5% versus down 0.9% for the value portion. But it's just some things we're always keeping our eye on here at Revere. So those are the indexes. Let's take a look at some stocks from the 21 over 21. Let's see who's leading and who's lagging. Yesterday, Northrop Grumman took a hard hit, bounced back today. Look how it undercut the 21 and the 50 yesterday. This is just very typical of the action in a bear market. You had two strong days as part of the G7 announcement was that Europe was going to commit more money to defense. Northrop Grumman had two really good days, and then yesterday a harsh drop, 4.5%, recovering most of it and closing above yesterday's highs. So happens a lot. You undercut the 21 intraday or intra-week, but recover it by the end of the week. Northrop Grumman certainly doing that today. Celsius continues to be strong, making a higher high, and two very nice volume bars, preceded by some nice volume bars leading up to it, and then lower volume on the pullback, popping above the 21. This is probably one of the best looking growth charts out there. UTHR, another outstanding looking growth chart, breaking out of this little handle here on above average volume. Note the lighter volume as it put the handle in, and a big move out, but very typical that things don't fly away when you're in a bear market, and it did pull back off of its highs, as did the rest of the market. Decent recovery from CNC, which also undercut and tested its 21 yesterday, although it closed at the highs. Higher high today as it forms this double bottom. Medical managed care, several good looking charts in there like United Health and Cigna and Humana. On the other side, let's take a look at what lagged today from the 21 over 21. PDD, I didn't mention this because I completely ignored the tail of the tape, but PDD down 7.4% today, sitting on the 21, along with pretty much all China stocks because more COVID lockdowns over in China. Let's quickly go through this tail of the tape. As you know, we're operating under this rally failure and break of the 21 since 628. Let's see if we can recover it for the rest of the week. But today, 10 a.m. the news, 10 a.m. ISM services PMI was about in line with what was expected. I mentioned the 2 p.m. FOMC minutes. These are 3 weeks old. And really no surprises in here. The Fed committed to lower inflation, but it always does cause the algos to run stops. As far as support and resistance, I've pretty much already covered that. Support held at this 3,800 area, rejected at this 3,850-ish area, and the 21-day moving average on the S&P. GLD has been giving us fits. We're still holding our position. 9th down day in a row, extremely oversold in stochastics. We're expecting a bounce on this, and we probably will use that bounce to exit it. Jobs report coming on Friday. Bonds started the day strong, but lagged. Let's bring up TLT, as bonds have been showing some strength. Got 2 closes, actually 1 close above the 50-day, tried to poke its head above, pulled back to the 21. So TLT taking a little breather from its run up. Let's see if the rise in interest rates resumed as the Fed minutes. This really came off right around the Fed minute. Let's take a look at the 5-minute chart, and then I want to make sure I'm just not making stuff up. No, it gapped up. Well, it did come down after the Fed minutes too. So TLT coming down, actually that means interest rates going up. So we came down early in the day before the Fed minutes came out, but looked like this area is some resistance up here on TLT around the 117.50 area. So let's get back here. I talked about buying the QLD. We bought 5% of that, bought our Revere volatility adjusted beta up to 0.15%. Bottom line, pretty much the headline that I mentioned on the prior page. NASDAQ 100 closes above the 21. S&P rejected at the 21. That's what we're going to be focused on tomorrow. Big fib here, Fibonacci level at this 38.15 level. So now that we broke above it today, it's also the 20% year to date. 38.13 is the 20% bear level. 3800 is round number support. But another reason that we took that QLD position today is the QQQ. This 286.82 level is a 50% fib retracement of the entire COVID rally. So if that breaks that 50% fib, we'll give it up again, and that'll be another reason to sell, and that coincides with a break below today's lows, all in this area right here. As you can see that this 50% level has been a congestion level. Basically, it's right around here. You can see how the NASDAQ 100 has been battling that 50% level going back to the beginning of May. So where was I before I brought up the tail of the tape? Oh yeah, charts. Today we looked at PLD, GTLB down 5% today, but this is just an inside day. Don't like that the volume was higher. Do like that the relative strength is continuing higher for this. So this stock really appears to be accumulated. You had a big up breakout day yesterday. As is typical, things just don't run away in bull markets. Inside day today on GTLB. SWAV pulled back 3%, actually had an outside day, but volume has been below average over the last week on this, and it's sitting on the ADMA, still one of the better looking charts. Firming up. Zoom down 3%. It had a big day yesterday, up 8.5%. So just giving some of that back is natural with stocks in a market like this. One of the strongest stocks in the market that is not on our list, but it's knocking to get into the 21 over 21 list, brought to our attention by Alex Katutis. CRISPR. Big move yesterday on volume, bigger move up today on volume. But again, these things just can't run away. It reversed, still held its 200-day moving average. And biotech has been acting extremely well. Hunter talked about this last week. You can see the move up stronger yesterday, 5.8%. Tried to make a higher high today, gave it back, still closed slightly positive. But biotech very clearly outperforming. Big resistance area here on XBI, this 82, 83 area. You can see over here from 80 to 83 in this January, February area. We're just coming right back into that. Wouldn't be surprised to see a pause here, put a little bit of a handle, have the moving averages, particularly the 8 and the 21, catch up to the action and give us a better lower risk entry point. Note the relative strength on XBI, and the bigger cap biotech IBB also showing relative strength, also coming into this resistance area from back in January and February. That's going to wrap it. As always, love to hear from you. You can email me, don@revereasset.com, or phone 855-REAL-WEALTH. So wrapping up Wednesday, July 6th. This is Don Vandenbord telling it like it is. Want to remind you, it's not how much you make in the market, it's how much you can keep. That's why we have a sell discipline and are particularly defensive when the markets are below the 200-day moving average, because that's when risk is at its highest. And I'm really just quoting historical math-based market facts. It's not an opinion. Thanks for listening. Have a great day.